Good evening, everybody. I hope you've had a wonderful day, and tonight I'm back to talk about finance. Finance. Now, my aim is to try and keep this interesting and relevant to your needs. I've had a mix of different queries and questions, some quite interesting, some quite basic, but I'm going to try and help you understand finance to grow your profits in your practice. What qualifies me to do this? I suppose I'm an accountant, firstly, for the last over 20 years now. And I've been dealing with dental practices per se for over 15 years. And I've seen every type of situation. I've seen practices grow their businesses because they understood their finances. I've seen clients and practices go bankrupt because they did not manage their finances pretty well and they stuck their head in the sand. So my time over this evening is to just try and get some general points across to you and help you understand some of the things that you need to be considering and building your knowledge up to help you grow your profits whilst understanding some basics of finance. So without further ado, I'm going to move straight into a little bit of a dry subject, but I think it's very important to understand, and then I'll show some examples as well. It's just trying to understand what are the main financial statements and things you need to understand. So let's move on. If it's going to work, hopefully. So when you get your set of accounts from your accountant at the end of the year, you'll typically get the first two things stapled together, and what they are the profit and loss account and the balance sheet. And they are showing you the performance over the year, the profit and loss, and the balance sheet shows you at a snapshot in time what your assets and what your liabilities are. The third point there is a cash flow statement. That's not typically part of your statutory accounts, but it's something to be aware of and something that you should consider getting prepared if you're not, and that helps you with the cash flow of the business. And that's helping you plan for the future, knowing when the dips in cash will be or when you need a funding requirement for your business. So three main financial statements, and let me expand on each of these separately. So, kind of a diagram I've drawn here. You've got the profit and loss account on the left, and you've got the balance sheet on the right. And when you buy, say, a dental surgery, or you buy dental equipment, you're buying some assets, or you're buying goodwill, you're buying some assets. Usually, to acquire those assets, you have a liability, a loan. And both of these assets and liabilities sit on the balance sheet. But as time goes on, you're using those assets, and that loan has interest attracted to that loan, so you've got to pay interest. So it's based on the activity. The activity gets featured in the profit and loss account. So the fees that you generate from your goodwill, from the equipment, from the dental surgery equipment, are reflected in income. And so those things are fees from patients for their treatments, whitening, veneers, implants, checkups, all that type of stuff. And then the expenses are the activity of the expenses in the business. So you've got staff, marketing, bank, material costs, etc. Okay, lab costs as well. And at the end of the day, or the end of the year, or the end of the month, or however you reflect and record your numbers, the ideal situation is that your income is a bit higher than your expenses. Now, not rocket science, but important that you understand how the flow of cash moves around a business. And therefore, when you buy an asset, it might be quite expensive to buy goodwill. You need a large loan, and therefore you need some cash. And at the same time, you need to be then generating cash from the profit and loss, which will help pay the loan interest and other expenses as well. So let's move on. So what this is showing, that picture showing, profit and loss shows money flow over a particular period of time. It could be the month, it could be the quarter, a year, 2 years, or whatever, but it shows money flow over time. And it indicates taxable income and expense items, and indicates a profit or a loss. Income less expenses is profit or loss. Quite straightforward. Balance sheet, as I mentioned, is a point in time, and it's a snapshot and lists what you own, what you owe, and the balance of your financial position. So if your assets are worth more than your liabilities, so if your goodwill and your equipment is worth more than the loan that you've got a positive net worth. However, what you could potentially see is sometimes where people buy goodwill at a very high price, therefore they have a very big loan, and then they potentially lose the value of that goodwill, or some problem arises. That can then arise a negative net worth. So assets, less liabilities equals net worth, or net assets is another terminology you may have heard. Now, and a cash flow statement, as I said earlier, that's the cash receipts and disbursements over a period of time. It's similar to a profit and loss, but it's purely cash. And all cash inflows should will equal all cash outflows. Now, the difference between the profit and loss account and a profit and loss account, there'll be some non-cash items. Things such as depreciation and amortization of goodwill are non-cash items. That's kind of one of the big differences between a P&L and a cash flow statement. But we'll come on to this in a bit more in the future. Hold on. So one of the things you need to be doing, we've talked about annual accounts, and let me just get some documents up. I'm going to show you. If I can find it. So this is go back to this. This is a dummy client called Dr. Tooth, and these are the annual accounts for Dr. Tooth. So you can see this is all the standard stuff you may have seen in the set of accounts. This is the profit and loss account. It's going back a few years, but it's still very relevant. And this is showing a P&L. Income from private patients, in this instance, is £435,000. And then the costs are below. So the first section is cost of sales. And cost of sales basically means items relevant to the activity of generating fees from patients. So in order to do dentistry on patients, you need dental materials. You need lab fees. You have dentists doing some work, such as associates. So that then comes to the gross profit. And then after that are all the overheads or expenditure that you've got. So things such as wages, rent, light, heat, telephone, etc., etc. And then at the bottom, you've got something like depreciation, plant and machinery, fixtures and fittings. And then in addition, you've got finance cost, bank interest, bank charges, etc., leading to a net profit in this instance of about £98,000. At the same time, the balance sheet shows at that particular time on the 31st of March, in this instance 2006, is a few years back, but same principle, whether it's a snapshot showing the assets owned by this business are 111,000, fixed assets are 111,400. In the cash at that day, it had 19,000. At that date, it had creditors of 12,701 and other taxes payable of 1,058. So in this instance, the net assets were 116,000. So it's a net positive, net worth positive business. And you can then see the breakdown further of tangible fixed assets, etc. I'm not going to dwell on that. So that's a statutory set of accounts that you would typically receive. Now, one of the things you might want to consider, let's get this right, we've got here, when you're preparing, you're running a business and running it well, you want to have something like a budget in place. So what I've got here is making sure you can see this. We've got a budget here. So this budget is showing Dr. Tooth and all his associates each month what the income budget is, what the costs budget are, materials, lab, etc. And what you're trying to do is predict how you're going to do in the year, and then the other costs, and then you're trying to predict how you're going to get on with profits at the end of the year. So in this instance, they're trying to achieve a profit of 137k. At the same time, as I mentioned earlier, there's a cash flow statement, and the cash flow statement would have the same amount of income in this instance, I think. Let me just double check. Yeah, 40,266. Cash is 40,266, but then it's cash. These are cash things that happen to go out. There's a physical cash going out of the bank account. All of these things. So in this instance, net cash in is this row of numbers here: 13, 15, 15, 10, 15, etc. So it just shows the flow of cash. And what I'm trying to highlight here, there are different tools to help you understand. So if you're running a practice, my advice would be to prepare a budget for your next 12 months for the profit and loss, but also prepare a forecast of cash flows for the next 12 months. And then track your performance against your budget on a month-to-month basis, okay? That would be very, very important to do that. So that's what I'm trying to highlight here, is you can prepare a cash flow statement and a profit and loss forecast, and then on a month-to-month basis, you get a monthly account done for that. So let me move back to my slides now. So, yeah, I've mentioned profit and loss account, cash flow statement, and balance sheet, but what's really important is actually getting these accounts done on a month-to-month basis or a quarter-by-quarter basis. All too often I've seen dentists and other businesses literally just wing it for the year and not sure how their performance is. So what I'm suggesting is know your position, don't put your head in the stand, and really get your accounts done on a regular basis. And quite often that losses don't kill a business, it's the lack of cash in the business that kills a business. So in terms of a dental practice, you're actually quite lucky that it's quite a cash generative business. When your patient pays you, it goes straight into your bank account. Many other businesses have to wait for invoices to be paid by other companies, which can kill businesses if they've got to pay staff, if they've got to pay other things. So losses don't kill a business, a lack of cash does. But having a cash flow statement can help you manage your cash. And all too often I see, and I get clients, literally today's the last day, I haven't got enough cash to pay my tax bill, I've used it all. But if they'd planned for it and had a cash flow statement, they would have been in a much, much better position to manage that. All right, so how do you manage that? Well, I think the technology has moved on so well and so fast in the last couple of years, okay, in the last 3 or 4 years, and cloud accounting is the buzzword in the accounting world. And it can really help you systemize all your practice finances. And we're a big fan of Xero. We're a big partner of Xero, and it can help you save time, money. You can access from anywhere in the world, and you can get all your books done much, much quicker, more efficiently, and very reasonably priced. So let me show you a bit of Xero now. So what it does, how it can really help you. Now, this is a dummy client of Xero, and as you can see at the top here, it's sits on the cloud, it sits on the web. And what Xero has done, and excuse me, and other players, so there are other players such as QuickBooks Online or Sage Online or a few others out there, but we like Xero. They were the first and we think they're the best. And what they've created is a tool, a bookkeeping management tool, which is hosted online. But it's much more than a bookkeeping tool. It can really help you understand your business. So if this is the dashboard, and this isn't a dental practice, because we don't have a dummy dental practice on here, but it shows you in summary a snapshot of how you are actually doing. So here you've got a business bank account. Now the beauty of Xero is that, hopefully this will work, the bank account is linked directly to your bank. Okay, so as you can see here, 27th of Jan, something from payment from Gateway Motors. What this is telling me is that the bank account is connected to your Xero account. This is done through secure ways of doing it. So if you're a Lloyds, Barclays, RBS, whoever, you can connect your bank account and all that information on your bank statement, so you never need to print a bank statement again. It's all coming into your Xero system, which can save a lot of time and a lot of headache. So that's the bank account. Then there's, you can, if not necessarily relevant to dentistry, but you can see here invoices that you might build and what they're owed to you, okay? But more relevant may be something like bills you need to pay. So in this instance, you need to pay overdue of 4,754.49 pence, awaiting payment 8386.76. So there's a mix of things here. Let's go back to dashboard. You can then run some reports if you wanted to. So for example, as we were looking at profit and loss earlier, we can see the profit and loss of this particular client is this. So sales and income, less cost of sales, less gross, all these operating profits get to a gross profit, a net profit of 1,604.26 pence for January 18, as an example. So what we're trying to show you here is that there's so many ways of kind of managing your business, and a lot of it can be automated now. So all your invoices can be scanned in and go into Xero. All your bank feed, as I mentioned, all the bank information comes into Xero automatically. So what you need to understand is get someone who knows how to use Xero, get a team, like an accounting team who's very au fait with this, and you'll save yourself a lot of money and a lot of time, and you'll have useful information to understand how your business is actually doing, okay? So that's really, really important in that respect. So going back to our slides, let me get back to my slides. Get onto cloud accounting is the message, most definitely. And that's really, really important. So let me just get back to my slides. Okay. And the beauty of it, you can access it anywhere in the world. So I know, for instance, when we go away overseas on holiday, I can still access my Xero. I can do it with an app on my phone. I can do it over the browser anywhere in the world, and I can log on and pay staff, pay team members, pay suppliers, etc. Okay, so get onto cloud accounting, top tip. Now, the goals of being in practice are firstly, perhaps to be, well, hopefully to be profitable, have a good reasonable workload, good rewards, patient satisfaction with care, and I suppose being a good and responsible citizen. So in order to do that, you need to understand the profit formula. And we've kind of run through this already, but you can see here, you've got your sales at the bit at the top, which is revenues. Then you've got your costs, things such as variable expenses, such as your variable expenses can be such as light and heat and materials and lab costs. And then you've got fixed costs, things such as rent. And then you have your own expenses of life, stuff that you need to take out. And then you have your taxes that you'll need to pay, and therefore you're then left with your net personal spendable income. So this is showing the fuller picture. Remember, when you prepare your accounts for your business, that's just your business, but then in reality, you need to take money out for your own mortgage, for your children's fees, to go to shopping, to Sainsbury's, to buy your food. All of that needs to be done. And therefore, what you're left is your net personal spendable income after your owner's expenses, okay? So that's just a basic, very basic profit formula. Now, why am I highlighting this? Well, it's quite often or not that you need to understand this to try and determine, okay, what do you need to be actually earning to get the income that you desire. So some questions you need to ask when you're looking at that is looking at your account, looking at performance. Have I sufficient control over my overheads? Now, quite often or not, I've seen practices just keep spending and they don't have control over their overheads. They're not reviewing their costs on a regular basis. They're not looking at what they can cut down. Another option is, are we seeing too many or too few patients? Quite often or not, you might be seeing too many patients, but you're not necessarily delivering the care of them and getting the best treatment plans out of them. Are we booking patients in appropriate time slots? That could be another issue. Are the costs in line, especially staff costs? Staff costs are usually things that go out of kilter where people sometimes employ too many staff. And are my services adequately priced? So these are questions that you could ask when you're looking at your accounts, looking at performance, to see what do I need to do? What do I need to do? So this goes on to then working out your hourly rate. And this is something that's quite important. Now, I hear quite often every practice, someone says, oh, in London or whatever, I'm working to £250 an hour or £300 an hour. Great, fine, wonderful. But no one's actually, some quite often or not, they've never actually worked out what they should be or what they need to be earning at, okay? Now, this is a very simplistic model, very simplistic, but let me just run through it with you. So we've got productive hours, and what I'm meaning by is working days times hours worked per day, less holidays, and that's labelled A. In this example, in this practice, is 1,000 hours. Then the total cost with running the practice is B, and that's 80k. And you want to take home £50,000. So that's C. So required income, in order to get 50,000, you need to be generating £130,000. Now, the number of hours that you work to is 1,000. So basic arithmetic leads to 130 divided gives to £130 per hour in this particular example. Now, you might then, that's your hourly rate for the business in order for you to generate a target income of 50,000. Now, if you, certain services that you deliver, maybe at 130, certain services maybe at much lower rates, maybe like a checkup. But certain other services, maybe like an implant or ortho treatments, maybe at a much higher rate. So it's trying to get that right in terms of the balance, trying to get the number that's right for you. And I've shown it very simplistically here, but it just highlights that. Now, one of the things that we've always found very useful is working out the hourly rate of the clinic in terms of costs, and then determining how much does it cost you to open the doors of the clinic. And if it then from that moment onwards, you can say it's right, it's costing me just £50 just to open the doors of the clinic per hour. What I therefore need to be generating more money, and that's a great way to show to your team members. They understand, oh my God, it's costing them like £50 or £100, whatever the number is per hour, just to open the doors of this clinic. That then makes them think, okay, we need to be generating more than that per hour. Okay, so if they generate it, if it's £100 an hour costing us, they need to be generating £110 an hour to make it a worthwhile venture. Okay, so just an outline on the hourly rate. So let's do another example. In Oakwood practice, the cost of running a surgery is £45,000 per annum. Gina is the only dentist working there, and she spends 45 minutes to perform a checkup on a patient. 800 hours of work to the practice per year. Gina wants to earn about 60k per annum. What should she be charging for a checkup? Her checkup's 45 minutes. So the cost of running is 45k. Her target is 60. So the income she needs to generate is 105. The hours that she works are 800 hours per annum. And therefore, her hourly rate is £131.25. The price of a checkup, since it's 45 minutes, should be, on a very theoretical basis, £98.44. Now, we all know not many people will be charging a checkup at £98.44. You might drop that to £50 or £60, whatever it might be. But then Gina will hopefully be making up her hourly rate at certain things, as I said earlier, for implants, crown and bridge work, whatever it might be, double £131 an hour. So what I'm just trying to show you here are some very, very simplistic but very useful ways of determining what hourly rate you should be working to based on the income that you want to achieve. Now, Gina only wants to earn 60k. You might want to earn 600k. I don't know. Okay, but that's what you need to be thinking about. Okay. Let's move on. So, sorry. So that's moves on. That's the hourly rate scenario. Now, what we then need to then start thinking about, you might be running your practice, and we need to look at how you can improve the profitability of your practice. Now, you can improve the profitability of your practice in numerous ways. And so let's run through some outline examples here. Your gross is 200k. Your overheads in this particular practice is 140. So the profit is 60k. There's a 10% expense cut. Let's say, so you save costs of 10%. Therefore, your profit is now 74k. Therefore, you've increased the profits from 60 to 74. That's a net increase of 23%, which isn't bad at all. The other way of increasing your profits is to become more efficient. So in this instance, you might increase your efficiency by 10%, so you generate another 20k. Your overheads are reduced to, increase to 144, because we're only increasing the variable costs. Therefore, your profits have risen from 60 to 76, a net increase of 27. Another scenario is you increase the fees, and this is where I think there's a real opportunity, is you increase the fees from 200 to 220, and your overheads stay the same, and your profit goes from 60k to 80k, a net increase of 33%. A nice large increase. There may be the scenario where you lose a few patients if you put your fees up, and therefore there's a net increase of 17%, okay, from 60 to 70,400. So you can start seeing the trends of this, and start seeing how to, if you can change a few metrics in terms of efficiency, or change it in terms of pricing, or in terms of cutting your costs, they can all have a positive impact on growing the profits of your business. And couple that with understanding what your target hourly rate is, that can then have a contribution to increasing the profit. So in summary, in this instance, you cut your costs by 10%, you increase by 23%, become more efficient, you increase by 27%, a fee increases 33%, becomes 33%. Imagine those top three. If you could do all three of those things, cut costs, become more efficient, increase fee increase of 10%, you'll have a massive impact on the profitability of that business. And that should be what you should be trying to aim for, to cut your costs, become more efficient, and increase the fees. Not as easy as you think, and it's very simplistic to show in numbers, but the ideal situation. Now, this is a question I'm always asked by so many of my clients over many years, and if we go back to those accounts that I showed you earlier, the gross profit is around 60 to 65% of a business. So the gross profit is the sales less the cost of sales. So cost of sales being the activity related to generating the fees. So in most practices, it's around 60 to 65. Lab costs are around 8 to 12%. Materials are around 5 to 8%. Employee costs are between 16 and 20%. And the net profit margin of a typical practice is around 30 to 35%. So if you did some benchmarking of your own practice against these numbers, it's important then to see, how do you compare? Are your lab costs out of kilter? Are your material costs out of kilter? Are your employee costs out of kilter? It could be any of those things. It could be different, or they could be much better. But these are just some. And my point to stress here, it's important to monitor some of your key performance indicators. That will then help you analyze your business better and make better decisions for your business. So kind of not wanted to, I suppose the point here is, I don't want to tire you out with finance, because there's such a dearth of information and understanding. But one of the things I stress you do is review your fee list, and what can you change. So one really popular tip, and we've done it for many, many clients, is for you, if you're using a software-based system in your practice, is to extract the data to get every service and every price that you've got, and from that, see how many times you did let's say you did a filling, and just say you're charging £100 a filling, and see how many fillings you did in the last year. Now, if you up that filling by £5, how much would that impact the business? So if you did 100 fillings in the year, and you upped your filling price from £100 to £105, £5 times 100 is £500, just for changing your price on that particular service. The likelihood of someone moving from 100 to 105, someone leaving and changing, is pretty slim. Okay, so I would strongly suggest you review your fee list. The other point to note is your costs. I would go around and look at all the cost base in your practice and identify 3 to 4 costs that you can cut. Getting you quotes from other suppliers, materials and utilities are always a good starting point. And look at, how can I negotiate better deals with those suppliers? And then the third point is, go back to the hourly rate. Understand your hourly rate. How much should you be charging your services for your practice, and then determine how you need to be generating, how much you need to be generating each hour to reach your target profit. And if you're not sure about that, if you're not sure what hourly rate is, just drop me a mail. Happy to give a little bit of help and guidance on that area. Sometimes people get a little bit confused on that, so I can help you work that out. Okay, I can help you on all these things: review your fee list, identify 3 costs, and also your hourly rate. So just drop me an email. Happy to try and help. So in summary, I've tried to keep finance relatively straightforward without you all not nodding off to sleep. So I've kept it slightly shorter tonight. But don't be afraid of finance. Seek professional help if needed, and then the numbers can really tell the story. My top tips, though, are to make sure, if you're not on cloud accounting, get onto cloud accounting. That will save you time, it will save you a lot of money, and it will help you understand your business much better. Work out your hourly rate for your practice of what you think you should be earning. And similarly, look at that cost base to see what you could cut back on your business, and then try and understand your financial statements. They will really help you make better decisions for your business, for you in that respect. Okay, I hope that gives you a good understanding of areas that you can increase how you can increase your profits by understanding your finances better. And then look at your pricing, look at where you can cut costs, look at where you can become more efficient in your business. Okay, let me kind of wrap this up then. Thank you for your time and attention today. I hope it's been useful, and we can kind of catch up on the next call. Thanks. Good night. Bye-bye.